Hello ladies and gentlemen, and welcome to this video presentation on license contracts. This video presentation is based on the Cisco HADA accounting framework. So if you're ready, let us go on with the presentation. The framework as a whole, class 2 intangible assets, and as we mentioned earlier, our focus now is on account 2.1 intangible assets. This is the breakdown of account 2.1 intangible assets, and this particular video presentation will stress on account 2.1.2 patents, license, concessions, and similar rights. So let us have a breakdown of this accounting. So account 2.1.2 deals, as we saw the name earlier, it deals first with patents, secondly with licenses, thirdly concessions granted by government entities, and then other concessions and similar rights. So if you're okay with that, that was just to set the tone of the video presentation. Let us look at the table of contents then. So let us have a look at the table of contents of this particular video presentation. The first item on our program is to look at the definition of a license contract. And as you see, generally the idea of a license contract is for a party to give an authorization to another party to sell or use one of its products for a given fee. So that license contract is that authorization. Next, we have to look at the different types of license that we may encounter. The first one is a total license, which gives full application or full use of a given product to the licensee. The second type is a partial license, whereby the licensee only has part or can only enjoy or benefit from part of the product, not the full product. For example, the partial license may give the right to an end to the licensee to sell the product only in a given region, for example. That's a partial license. The last one is an exclusive license, whereby the licensor cannot give the right to another party. So the licensee has received the full rights on the product, and the licensor cannot give rights to another party except that given licensee. So that licensee has the exclusivity of the product of the licensor. Initially, licenses are recorded at cost, and the cost is the cost incurred to purchase or to obtain that right or that authorization from the licensor. And this is done by debiting account 2.1.2.2 and crediting a treasury account, any relevant class 5 account, or crediting a supply or fixed asset account if the license. So in the previous slide, we saw that the licenses are initially recognized at cost. And usually, as we said, the cost is the cost incurred to purchase or to obtain the license. However, a license can be obtained through regular payments or regular fee payments throughout the life or the duration of the license contract. In that case, if the license is obtained through an annual fee which is made up of a fixed and variable component, for the fixed component, it will be recognized as a fixed asset at the time of the authorization of the license. Hence, that fixed asset will be recognized under account 2122 license, and the double entry is to recognize an equivalent amount as a liability due to the license that has been obtained. Because in this case, the license is not purchased, but the license is obtained through regular payment throughout the duration of the license contract. So if the fee is made up of a fixed and a variable component, the fixed component is recognized as an asset at the inception or the beginning of the contract, whereas you have a corresponding liability recognized as the double entry, and if the variable component cannot be measured reliably, it will be expensed in the income statement in the period in which it is incurred. So it means that if it cannot be measured reliably, you have to wait until it occurs and then you recognize it in the income statement in the period in which it occurred. However, if the entity can reliably measure the variable component, that variable component will be capitalized based on the total amount which will be paid due to that license contract. So if a license contract has a period of 5 years, the variable component which will be paid for the 5 years in total has to be recognized at present value and included into the cost of the asset at the inception of the license contract. So this is a very important part for the variable component, because either the entity can be able to measure reliably, and in that case, if the entity can be able to measure the variable component in a reliable manner, in that case the present value of the total amount which will be paid has to be capitalized. But if it cannot measure that component reliably, in that case it does not give rise to the capitalization of a fixed intangible asset, but instead the variable components will be expensed in the income statement during the period in which they occur. After having initially recognized a license contract, that license will be amortized based on the duration of the protection it confers to, based on the duration of the right. So, we have come to the end of the video presentation. We hope you enjoyed the video presentation on patent rights. Do check the page for more videos on the Cisco-HADA accounting framework. The current one, the upcoming one on licenses and software and the internet. So do not hesitate to contact us if you have any questions or suggestions, any queries. And we really hope you enjoyed the presentation, that it has helped you either in your academic activities, in your professional activities, at work. Have a nice day.